All right, this is Jim Smith at Gann Analysis LLC. You can find me if you want to reach me by email, jamesmith at gannanalysis.net. Today we're talking about silver. I want to show you the relationship between silver and the S&P. In the old days, if silver went down, you could pretty much expect the S&P to go up. They were inversely correlated. Now, more lately, you see silver goes up, S&P goes up, silver goes up, S&P goes up, silver goes up, S&P goes up, and more importantly, when silver went down hard, the S&P went down. So the point this is not without risk in buying silver, because if this S&P rally suddenly turns and goes down, you might see silver go down too. But I don't think silver will go down near as much as the S&P if both markets go down. And I have a reason for that. I'll explain that in a minute. Right now, I just want to point out that this correlation seems to be reasonably strong. We do have silver going up, and we have the S&P going up. So both of those markets seem to go up together. And maybe if you look at the S&P breakout above the triangle today, if it really is going to 43.87, this is the base. You move it over here to the area of the breakout. It forecasts a move to 43.87. Is it really going that high? I'm not sure. I'm just telling you, reporting what the triangle is saying. I'm not saying that don't go out and buy the S&P and then if it goes down, you blame me. You know, this could be a false breakout. We could go down, take out 31.17, and boom, instead of this thing measuring a move up, it could be measuring a move down. So nothing is without risk. I'm not telling you to go buy the S&P today. But what I really want to say is, if the breakout is real for the S&P, should you be buying the S&P, or maybe you should be buying silver? And the reason for that, last week you had a breakout above the 61.8% Fibonacci retracement from the high on the September contract. And this says 1910, that's yesterday's, it's a closing basis. So actually it got to 1975 today. It's trading around 1950. We do have a legitimate breakout. We're above the September 2019 high. I think we're on our way to 2430 or 3004 or even higher. And so getting back to the original question, which should you buy? If you're looking at stocks, the S&P versus silver, I don't think there's any question. There's a lot of risk in the market for stocks. You look at tech stocks especially, like Amazon, Apple, Facebook, or even Tesla. You know, these stocks go up 10% in a day, no big deal. It's like day in and day out they go up, but they are looking kind of bubble-like. But your question is, well, you don't want to miss the rally, so you're saying, what do I do? Is it too late to buy the stock market? Yeah, it might be too late. Maybe you're better off buying silver. And the logic here is that if the rally in the S&P is real, you'll probably get a better performance boost out of silver than you will from the S&P. And the logic is that this is a beaten down market. Look at this. The high was near $50 back in 2011. You got all the way down to $11 area. And at the same time, the S&P, where has it gone? Nowhere but higher. So everything's out of whack. If you're going to believe in the stock market, then you should really believe in gold and silver. And you can imagine what's going to happen once gold pops to new highs. Silver is going to have to catch up. The high on the gold-silver ratio was 123 back in March. The high back here in 1991 was about 102. So this is an extreme high for the ratio. I think we've been selling off. We're at 94, 95 area. I think we're going down to 32 to retest the 2011 low. What you look at in a gold-silver ratio, it peaks and troughs, and it basically, if you're in a bull market for precious metals, silver will always outperform gold. So if you like gold, you should really like silver, especially given this ratio is headed back to 32. So there's a real argument for silver. And so look at this chart. The triangle, a lot of chartists probably have this triangle. It's a classic chart pattern. And so they're getting all bulled up because they see the breakout. I'm not arguing with that. I'm not arguing against it. I'm just saying if you really believe this chart pattern, then you should really be buying silver because the correlation is very strong. Here we have silver going up. Here you have the S&P going up. They go up together. So if you do believe in the stock market rally, you should also believe in silver, only way more so. So that's my major point. I'm not telling you to buy silver. I'm not telling you to buy the S&P. I'm saying there's going to be risk in all these markets. If this suddenly turns around and goes down, yeah, silver could go down too. So nothing is without risk, but I think there's more reward for the amount of risk that you take by going into silver. Now, if you like what you see here, send me an email. Try out a 3-month trial subscription, and you'll be surprised at how low the price is. Send me an email, jamessmith@gannanalysis.net. Ask me what the price is for the 3-month trial subscription, and we'll get you started. Here we go, jamessmith@gannanalysis.net. You will be shocked how reasonable this service is. And we're not just covering silver and the S&P. I cover gold, silver, commodities in general. I cover the S&P every day. I cover Forex, bonds, currencies, and even Bitcoin. So whatever market you're interested, we've got you covered. And if you send me that email, now's a great time to do the 3-month trial subscription. You get a low rate for new subscribers. I think it beats a poke in the eye with a sharp stick. Good luck in your trading.